Like I don't never get in when it first break because I always tell you 70% of the time we break trend line support or resistance. Um, it's a fake out.
Mm.
And then we could get into this if you want because um I think it's time for me to eat. Apple, what I'm looking for is well Apple I'm looking damn everything is showing up kinda. Let's see there. Yeah. Everything's showing in the air that it wants to go up. So we're gonna retest our resistance again, 179.50 if we don't gap up over it. Because if we do, shit could go until fucking this shit could run until Powell come in and says whatever he has to say. So I like to do like I don't like to predict or try to guess anything because if it don't go my way, that shit gonna hurt. Like I used to trade like that 24/7 where I'll be like, yo, this is dropping. So I will only set up a plan for puts, which is like the dumbest thing you could do. Cause like, and you shouldn't like not. You should always have a plan B in case something. Well, actually, you shouldn't. I want to say you want to speak into existence, but with trading, you want to have two setups. You want to have a setup for down and setup for up. There's no setup for sideways because you don't trade sideways. So um 179.50 is what I'm looking at. And we closed at 179.07. Um so if we was to gap up over 179.50, I'm looking for us to go. Our next resistance is going to be right here. I'm gonna look to see if there's a wall ceiling for the candles that's closer than this. I got so many lines here. I'm about to start deleting them so y'all don't got confused. Um, so our ceiling will be the yellow. The green line is our ceiling. So our floor is the red. So I'm gonna leave the yellow one. So if we was to break the yellow, which was the resistance now. We was to break that 179.50. I'm looking for us to possibly go up to 180.95. So 180.95. So 181. I'm looking for us to go up to if we break 179.50. So that's not even worth it. So I will wait for it to come back down and retest because I want something higher than that. So if I see us break 179.50 gap up, and then we break through 180.90, 181 area. I want to see, and we come back down, and we bounce off of here the yellow line, which is 179.50. If we bounce off there, then I would get him the call to see. Then our next spot up will be. It's not much. It's not much stopping Apple from going up. To be
Definitely
honest.
can touch 183 on a good day.
Huh?
I say you could probably catch 183 on a good day if he hit 180 support hard in the early.
Yeah. So I'm looking for Apple to go to 182.90. So we'll say you could say 183, but I'm looking for 182.90. If it goes up, if it gaps up 179.50, comes down, well it breaks 179.50, it's gonna go up. I'm looking for a rejection off of 181 area and then come back down to retest this 179.50 area. If I see it bounce off of it, then I'll get in my calls with a tight stop and I'll take profit. I probably won't take profit at 181. It's not worth it. But I'll take profit at my right here. I remember this where it was 183 is where I'm looking to take profit at. If I'm getting in around the 180 area, I'm looking to get that much. So yeah, so for calls, that's what I'll be looking for. If we drop, our support will be 177.65 is the support for Apple if we drop. And then if we lose 177.65, I'm looking for a test of our AVWAP. It's like a magnet. I use the AVWAP like a magnet. I always look at it as price is gonna come and retest this. Like price just love coming down or coming up to retest it. You just don't know when, but within that day, it's gonna come back more than likely. And the retest is like 3 times I look for is the same as like resistance and support. So if we lose support at 177.65 ish area, I'm looking for us to come back down to the 176.70 area to test the AVWAP. That's what I'm looking for it to do. And then, if we lose that, then we should definitely drop. And this is where we will fall. We wouldn't drop. We wouldn't. It's like hard. I just noticed that it's 176.50 is a tough area for Apple to lose. We lost it, but we bounced off another level. Like the structure that it just made though, after we lost it, like when was that last month? We lost it again this month too. I didn't pay attention to it. Oh yeah, we bounced off the 174 area. But now the structure that it made, we could possibly not even go back down to 174. We could bounce right off of this 176.45 area. But we know if we lose the 176.45 area, because these candles is huge, there's multiple candles right here that could hold price up because candles bounce off of candles. You see this candle bounce directly off of it. This green one directly off of it. Candles bounce off candles. And then the AVWAP is right there. Same scenario again. Got the AVWAP and then we got these candles. So we know if we break that, that means we are flushing. That means sellers is in control for real, because that's a tough area right here. So right now we want to look for this. We want to watch the 20-day moving average, 180.43, because we got a cup and handle forming right here on the daily. See, this is the handle right here. The cup is right here. And if we reject off of the 20-day moving average, 180.45, we reject off of that and we come back down to retest our 177.65, that's a cup and handle if we bounce off of 177.65. And it looked like that could play out, that cup and handle, because this area right here, like I said, is tough. We could bounce off these candles and bounce off the AVWAP. So I'll be looking for this cup and handle to play out. I'll be looking for us to retest the AVWAP. If I ever see us going down, I'm looking for it to come down and retest 176.70 ish area. If I see us gap up, then I'm looking for us to hit that 183 area of Apple. But remember, 181's first, and then 183 levels. So Apple SPY, I try to do $2 to $3 levels. So we got 181, then we got 183. Well, we got 179.50. Sorry. Then we got. I'm gonna give you out exact levels. We got 179.50, and then we got 180.95, and then we got this 182.90 area. That's what I'll be looking for on Apple. And do anybody have any questions about that? Nope. This is see, Apple's gonna be tough to fall because this is another thing I am sure you. We are in a buying channel. We are now back in the buying channel. So Apple's gonna be tough to fall because then we got the trend line where it could drop and bounce. When y'all see my white lines, that's what y'all looking at. That's my trend line. So we could bounce off this 178 area and not even go all the way down. So we got the trend line. We got the support. We got the AVWAP right there, and then we got candles holding up the structure. So we got a lot of candles. We got a lot to break through. So we know if if Apple retests 176.87 and loses that shit, it's gonna flush. But and we know if it loses 178, that's where it's headed. It's headed to retest the AVWAP if it loses 178 area. That's where it's headed. But remember, we could possibly bounce off our support at 177.65. It's showing it wants to go up though. Moving average is showing it. My trend lines is showing it, and the candles candles not really showing it because we at resistance. But my trend lines, buying channel, moving averages, 5-day, AVWAP, 50, all that is pointing up. But we want to watch the 20-day moving average. That's very important because look at Apple. It rejected. Look how many times Apple rejected off that 20-day.
And can I say a buffer?
It rejected off the 20-day. All this, the 20-day is the yellow line. So Apple rejected off of it so many times. Right there, rejected all these times right here. It didn't, and y'all probably like it didn't touch it, so it's not rejected. This yellow line up here in the middle, that's the 20-day moving average, 180.32. But it doesn't have to literally touch it. If resistance is really strong, it's not gonna come all the way up and touch it. So
I know, you heard me.
Can you mute? Hold up. I'll take back the mute all.
It brings
mute
it
all.
back.
Yeah.
Like I thought with it, cool. You feel me?
So I'm looking for a retest of the 20-day moving average just because it's so strong. Because we didn't even go all the way up and touch it. We came close to it. I believe we did touch it once. We touched it right here, and it look, sellers were just waiting there at the 20-day moving average. So now we're gonna expect them to be waiting there in the future again because there's liquidity up there, which is money. Look at all those wicks right there. That's just they just sitting there. Sellers just been sitting by this 20-day. So they right there at the 20 days. So they still there. They keep flushing. Come out time. So now that's what we expecting now. And this is an area where it flushed already. See, it flushed. It didn't necessarily flush right here, but it went down. It was right there. And see, it was over here too, just above resistance, 179.50. So now that's what we looking for, that same scenario now. We looking for it to come up here. So this is how you could short Apple if you want. And this is how I will play it. I will wait for Apple to break 179.50 and head up to 180.43. Our trend line, you see, I didn't put the trend line on a 20. It's just that's how accurate the trend line is. Our 20-day moving average is sitting right on our trend line. So we got our 20-day moving average that we've been rejecting off of, and we have our trend line. So there's that. This is a high quality setup right here that I would take. So I'm gonna wait, and it's showing us that we're gonna go up. So we definitely gonna retest, try to hit this resistance at 181, I should say. So I'm looking for us to reject. As soon as I see signs of us rejecting that 180.43, I'm gonna use this as my barrier. I'm gonna put my stops behind my trend line, behind the 20-day, behind my resistance, and then I'm gonna look over for structure, like candles that could actually block me as well. So I got all this structure. I got all this protection. All right, so what I'm going to be waiting for is, again, let me start that over. I'm waiting for us to break 179.50 and then go up and retest this. Basically, I'm looking for it to retest resistance at 181. But in my mind, I know there's a high chance that we reject that 180.43 again, which is the 20-day moving average. I look for us to reject like 3 times for us to flush. And if we go up there again, it'll be the 4th time. So the chances are we will flush, and hopefully that's when hopefully we don't, well, it's gonna go up there before Powell even speaks. So and then my stops is gonna be, I'm using this as my shield, my body shield. I'm using the 20-day, my trend line, and my resistance. My stops is gonna be behind. I'm using that as a wall, plus I'm using the structure of of the stock itself as a wall, 180, 150. My stops would be at like 182. And I know if we go past all that, because 182 and we broke this as well. We got all this protecting us. So if we go past that, then I know we reversing. You want to put your stops at a spot that tells you, okay, it hit my stop. I know for a fact now we're bullish, or because now we're reversing the other way because there's no way in hell that it hit my stop and going to shoot back down because I ain't put it in an area where retailers is going to put it. Most people's going to put it. If they get in the trade like right here, they're going to put their stops right here. If they would have gotten their trade, they trying to short it by the 20-day moving average 180.30. They gonna put their stops right here, and that's what the market make. They know that they liquidity grab is stop loss hunting. They see that's what they did right here. They came up and grabbed that. They snatched that and then went back down, and then you like fuck. And then you see that shit grabbed your bag, and then it went back down to your direction. It's gonna do that again. So you want to put your stop in a safe area. Again, I'm using protection. I'm using a 20-day. I'm using my trend line, and I'm using my resistance to protect me from that area. So I was short Apple. So if I was to get in it, and I see that it's going to retest the 20-day, then what was I on? Okay, I was on the hours. So I'm waiting for it to retest the 20-day moving average. So 180.43 is what I'm waiting for. And how you can know a reversal is coming, you're looking for candlesticks like this, dojis and indecision candles, stuff like that. Because this is just showing bulls and bears were equal in the battle, basically. Like there's no clear trend, but you can see this last one right here. Sellers have a little bit of momentum, but that don't mean nothing. Buyers could just come in and with an engulfing candle and swallow it up and shoot us right back up. So, but that's what I'm looking for though. I'm looking for my candles now, like hammer candles, like this candle in the middle. That's a hammer candle. You see that? It's telling us sellers in control. Now this candle right here is showing us now they got momentum, and now we getting it again coming. But see that third candle right there is it wasn't sellers wasn't strong enough right there. And I noticed that this week. Um that's the bad part. But the Bears is safe. Y'all say Bears. The Bears are safe because of the FOMC meeting if it goes their way. Because this week they had so many chances to push us down. And I noticed no sellers came in. Like Monday, last week they had chances to put it. They didn't push us. We went down, but the momentum they had, they could have had Apple build like 174 is a key level for Apple. That area right there, they had a chance to take over that, and that would have really flushed down us, spy and shit like that. But that's a key area, and I noticed that they couldn't even do it. Like no sellers did not come in at all. We didn't have that many sellers. It's like no big money in the market the past. It's like they're waiting for this FOMC meeting, probably, possibly. I don't want to
Yep.
guess.
Just about most of the well-known stocks behave the same exact way. Look at
Mm-hmm.
AMD. AMD traded in the channel between what 100 and 102 for 2 days. Uh, Tesla today. Tesla, she do $10 moves like it's nothing. She only gave
Mm-hmm.
us like three. That's why I
Yes,
know
you
they
know,
they holding on to that Uno card, ready to drop it. They holding it. They holding
yeah,
it. They
that's
holding.
exactly why I be saying that's why I don't trade news, y'all. Some people do trade, and I'm not knocking this shit, but I personally, I'm not what the news move the market. I'm a supply and demand type of person. You need, I mean, it's I get what they say. It more so fluctuates the market. I'm so like yeah, Tesla didn't move at all, and I would clearly that's why I only trade price action, not news, because even if some news came up or whatever, it's not guaranteed that it can move. Like just like it's not a guarantee if good news could be good news, like Neo. I tried that shit. I don't trade news, and I fucked up and I traded Neo with not news, kind of yeah news technical, cause I was
Because
looking at
Neo
two.
affected by Chinese macroeconomic.
Yeah. I
That's
was
the
looking at all. It
problem.
was my first time doing that shit, and never again. I made a mistake, a big mistake, and never again I will do that. Cause I seen all the news with Neo and all this, and I fed into that, and I'm disciplined, and I still fell for it. This was recent too. This was like a month ago. I fell for it, and I'm thinking, yeah, Neo going to 23. I got James Harden, Steph Curry in the chat. I'm hyped this shit. That shit had me looking like a dumbass because that shit at $8 some change right now, y'all.
Neo would have to
This
break
shit,
$12 to show some real teeth. Otherwise, she's gonna trade this at $9,
damn,
$11.
look at all these things on.
Like you, once you
Neo
fix
made
her
me dirty.
10, she'll go to 11. She'll get you for a good 11 from 10, but after that, she's going back down. Until she
That
could break
shit.
out of that channel.
And the crazy part is I held Neo. I did some stupid shit. Like I held it. Like I was so confident. I'm human, like, but that was dumb though. I was so confident on Neo because I seen it pop over previous highs right here. I seen it pop over that. So I'm like, oh yeah. It was like 13 or some 14, you say. And I'm thinking like, okay. Cause this how I trade. I'm looking for I didn't wait for the retest, y'all. I did some dumb shit. Normally I'm looking for 14, looking for okay, we bounce, we bounce, we bounce. We finally popped that 14. I
Mhm.
look for a retest. I'm looking for us to bounce. I front ran it, and I'm like, I know we gonna bounce because of the news. At 14, we didn't bounce.
But
So
it was
I
no
had I
volume.
took it at $17, but
You
I
should know we
so
bounced. Got that volume.
yeah, I was so confident we would bounce off of the previous highs, and I lost my trade, and I suffered a loss. That shit, yeah, but it is what it is. Um,
Yeah.
yeah, Neo's dropping. So yeah, that's the setup for Apple. Anybody have any other questions before I go into Google? I'm gonna try to start hurrying up now. Um, so I get it over with. Google. I don't even know if that person's still on here. Anybody have any questions? You can unmute yourself. Mute, please mute. Are you concerned about FOC impact on Apple? I um
So, question for you on Apple. What's your plan if because of FOMC there's a sell off in the morning?
so I'm looking at with Apple to sell off. I'm going to be looking at my dollar index because I've been noticing that we just been bouncing off of it lately. That's all we've been doing. We've been bouncing off of it. So the dollar is when the dollar, the dollar when the dollar goes up, we flush, right? Inverse
Yep.
correlated. Inverse
Yep.
correlated. So what I'm looking for is see, it's been bounced. This is very important. The FOMC meeting right here. See, we got the structure right here, and we got our support right here, our floor right on the candles. So this 105 area. We've been bouncing here. It's been showing buyers was here at one point. Um, I'm looking to see if we lose that. Because if we lose this 105 area, and then we come down and lose that trend line, we will flush. So I'm gonna be flipping. Because this is our structure. We lose structure. If you lose structure, that means you're headed there. That's how you know reversal. Because structure, candles bounce off of candles. This is a flat surface right here. This is structure. So I know if we break that and multiple candles is under that, now I know that it's a change. It's a change of the structure of the thing. Now we're going to start something new. We might come all the way down here, and then come back up here and reject down. It's just the candles don't move just irregularly. They move. This is a certain way candles move. It's all structure. That's why I use my selling channels and my buying channels and stuff like that. So I'm going to be looking for, so if to answer your question, I would be looking at the dollar index
VIX.
how if it's bouncing off of support, I want to see that.
You want to see the VIX too? Is that you see that
I
up? It's definitely
I
time.
honestly, I ain't gonna lie. I don't use the VIX. I never did. I don't use the VIX at all. I don't think I ever did. Matter of fact, when I first started trading, I
Yeah.
used to be like, above 21 means don't buy. The market is in fear, and but I don't use the VIX no more. I don't. How do you? I ain't even trying to knock your shit though. Teach me something.
For
If you
me,
use the
it's
VIX,
more of if it's going up higher, like that means you need to consider getting out of call because if she don't stop going higher, then puts will be highly favored. That's as much as I really know off of that bit. Like I'm no expert in the VIX. I don't trade
Mhm.
it. All I know is two things: the VIX is up or the dollar is up. You need to be a bear. That's all I know. Or don't play the market
Okay.
at all if you can't handle, what I'm saying, something going down, watching it just melt and making money off of it. 'Cause we all know how to play calls, but and that's for me, like put I'm a perma bull. I hate playing put stuff. But I will if I have to.
But yeah, I'll play. I'll play. I only will scalp puts or like I'll be in it for a day. I won't swing it yet.
I do think that's
Uh,
you if you check your beat.
um, I'm gonna just do spy real quick, y'all, and then I'm gonna let yeah if y'all have questions for me, Will, Spence, Mario, any of us, you could direct it at. I'm gonna just chart spy real quick, but I'm gonna move kind of fast. So support resistance is at 442.90. So I would say resistance because we fell under. We have 442.78. I'm gonna use my AVWAP. I'm gonna anchor it on previous day. That's what we rejected off of 442. Oh, we right on top of it. We literally sit on top of it. If it gaps down, so this is a doji candle right here. If sellers come in and close this under like 441, we could flush down. I wouldn't say flush, but we could drop, and then with powwow, then we could flush. So all right. So let me put my levels on here real quick. So my support candles bounce off of candles, y'all. 439.50. Candles bounce off of candles. We almost touched 439.50. We hit like that 439.90 ish area. Um,
I got one request.
so it's well, huh?
I got one thing I want you to look at before you go, before you close out.
All right. So then now I'm going to zoom in. I'm gonna change these colors too. So see, looking for to hook the candle's body right on my lines. So 445.65. So with SPY, what I'm looking for, if we don't gap up, all right, so say SPY gaps up. What I'm looking for, we could reject right here, 440, 490. So if SPY gaps up, I'm looking for it to retest 445.65 area. That's our 20-day moving average at 445, 445.45. As you can see, we rejected off of it already. It's that strong, and we rejected off of it yesterday. Anytime you're under the 20-day moving average, you don't buy. When you're above the 20-day moving average, you could buy. Sellers they flushed it below it, so we want to be careful. We don't really want to buy calls here at this area. Me personally, I wouldn't buy it until it's above at least the 446 number. So Actually, I wouldn't. So, all right, right here we could reject that 446.20. So for calls for SPY, I have to see SPY above. I want to see it. No, because I do remember personally a key level on SPY is 447.
Yeah,
Is
I'm with you on that one. And that's probably, was it last year?
yeah, it's always been
Mm-hmm.
it's always been a key level. So it's red. All right, wait, because let me go on the weekly. Uh, so key level for spot always been 447. What is it? No, I gotta go back out to the past. All right, so then I'm just looking for spots we could reject. I'm looking for multiple candles. That's not a good area. I don't like that, so I'll probably go right here and look. Now I'm looking where we could reject. Oh, that is a. So I'm looking for. Oh yeah, that is a good area. 447.15. I'll rock with it because we bounced. I like how this candle right here bounced exactly off of it. Boom. So 447.15. So, so for calls, I don't like to trade sideways action. So that's all sideways right there. They're just ranging, like just ranging. So I want to see us break 447.15, and that's what I want to see us break 447.15. And y'all know how I trade. I don't just get in on the continuation phase. I get in on the exhaustion phase. Just the continuation phase. I'm not getting in because 70% of the time I noticed that it's pullbacks or fake out. So I'm looking for this right here. Reject off of this candle right here that I'm literally pointing at. I'm looking for a rejection there. 448.20. A retest of 447.15. And then this one risk $1 to make $3, $4, $5, $6 come in. It don't necessarily always have to be your resistance support levels. You want to focus. You really focused on how much you're risking on a trade and how much you're profiting on a trade. That's like nothing else matters besides that first. That's the most important thing before anything. It's how much you're going to risk on the trade and how much you're going to profit on the trade. That's the most important part. So I want to make sure that I'm risking. I'm making at least $3-4. At least I don't really like $3. I'm greedy when it comes, not greedy where I
I
want to
want
see
all
because
of
I
mine.
swing.
I
Huh?
want 100%.
Yeah, I swing. I
I
want
ain't gonna lie.
$5, $6. I don't want a little. I mean, it's not little, but I had to be in this trade for a month and sweat and all that shit. I need $6, a $6 move or something like that off $1, off of just risking $1. Like that's how you want to trade. And so I'm looking for us to bounce off of 447.15. And then if we do that, I'll go long. I'll go long and I'll go long because I like that key area right there. We've been rejecting that for a long time. And when we break through, that's where we had our previous high when we broke through. When we break through, we at least go up and we test 453 areas. That's a $6 move right there. That's 440 that 447.15. We keep bouncing off of that. We in the day bouncing off of that. I'll get in, I'll go long. I'll go long, put my stops in, and I won't take profit until I'm aiming for 453. Um, I'm aiming for 453, $6, and I'm not sure. It depends how much I'm risking. To be honest, you want to have that in mind though, like your key level where you want to take it at. you want to take, I want to take my profit around here. It's gonna reject here 442, 453 area. I want to take my profit. So once I have that in my idea, now that's where I want to know how much I'm willing to risk and lose. I don't automatically think how much I'm willing to risk and make. I want to think that um I want to let myself know that this trade can go wrong. I don't want to have the idea that it's going to go right every time. So my most important thing is how much am I willing to lose and be able to walk away and close my laptop after that loss. Because if I could do that, then I know that amount of money that I lost wasn't important to me. But if I have to revenge trade, that means I needed that money, and now I'm gonna be emotional and I'm gonna fuck up.
Your mind ain't gonna be right. Yep. You ain't gonna be thinking clear at all. You're gonna be chasing. You're gonna be watching everybody else hee ha ha making their money, and it's gonna be a catastrophe. So you gotta mentally prepare yourself, set yourself up. That's why I only buy. Sometimes I like very seldom do I take over 10 contracts, and if I do, because I'm highly confident on that trade. But like I'll spend $50 here, 30. Like I played AMC and made 50. I played AMC at $40, walked out with $20 profit. That shit adds up. You know what I'm saying? With one contract, yeah, I could have played a lot, but I didn't want to drop $400 to make $200 because with AMC, you just never know. Sometimes I knew that in a market like this week, it ain't running. I knew that for sure. That's just market psychology right there. But yeah, I only take I look at how much buying power I got, how much I'm willing to risk. Smart me would say, I want to make sure I got money to keep. I don't want to say rolling the dice, but stay in the game. That's what I should say. I want to make sure I got enough buying power to stay in the game to recoup anything I lost. Once I break that threshold, I'm messed up. I did something wrong. I failed. I failed my account. So you definitely got to consider that. Like if you got $1,000, don't spend $500-600 on a play because you better hope you're right. I don't care how expensive. And just because a play is expensive, don't mean it's gonna run. Don't mean you even pick the right play. Some of them plays. Some people I see that they'll spend like $600 on a play. It might even go in their favor, but your risk to reward. You know what I'm saying? You coming out. If you spend $600 and you walked out with 50, was it worth it? Was it worth stressing over $600, possibly losing that for 50? So those are things to consider. I'm gonna also say, please get familiar with your chart patterns. These, like I've, for the past probably week, if not longer, all I've been doing is just watching chart patterns play out. Some charts have them, some look weird and don't. Some of them are hard to tell what they are. However, if you identify something and you're not sure, bring it to somebody's attention. Somebody might actually know if you right or wrong. And you know what I'm saying? You might have struck gold and don't even know it. But always, always, always like do that. Look for patterns. Know what patterns are. Know what like the most simplest patterns will make you money. Like I look for bear because I don't like playing put. So I'm always looking for bull flags on anything. like I'll look for a bull flag in the clouds if I could find one. But if it presents itself, it's legit. I got other things telling me that this is going to be bullish, such as my MACD and RSI and volume and all that other stuff, moving averages. If all that stuff adds up, like I'm in there. So that's really the trick to it. Having enough stuff to support you. If you had to take your play to court, you want to make sure you got all kind of evidence to to present your claim. Otherwise, judge going to throw it out the window. You should too. You know what I'm saying? So always have I always say a reason for your thesis. Even if you just say, I think it's going up. Why? You gotta be able to answer that question. Why do you think it's going up? Don't just say I think it's going up because I see a lot of green candles. Okay, what do you see in them green candles? Maybe you overlooking a pattern, and that's the answer to the you know what I'm saying to your question. But if you don't know what you're looking for, if you don't know what to look for, that's where you need to start. And all of this is like your fundamentals you'll never be too smart for your fundamentals. You'll never outgrow your fundamentals. You'll always use them as much as you use words to write and your voice to speak. It's just that simple. I can't stress that enough either. If anybody got some questions to me, maybe y'all seen the play I did, or you unsure of something, or you might like how I explain stuff, let me know. Or if you want to sidebar me in chat, let me know. I actually need to read them because I don't know if people have been.
There's a lot of unanswered
Okay, I
questions in
see.
the chat, man.
All right,
Check it
let's
out.
see. We see. Um, somebody asked about how to swing calls. Was that to me just now for swinging calls? For swinging calls, I have to have a lot of confluences. Like I have to have. It has to be. What's the word? Basically, it has to be going up, going an upward channel, not showing signs of going down. Um, it has to be higher than the previous day, which further reinforces the previous statement. Because if it's higher than the previous day, it's presenting a pattern. Now, if it's higher than the past 2 previous days, then yeah, I would be inclined to swing. What made me swing CCL? What made me swing CCL? I looked at the chart and I felt like it was at a decent bottom to hold for like more than a day to watch it go up. Normally my swings is like overnight and I'm out. 9 times out of 10, my swings will generally be like that. Sometimes, pardon me. Other times, um, there are some plays, and I have some plays on my watch list, and you guys have seen some plays on my watch list where if you just held that play for a week, you could have walked out with $600 or $6,000. So I'm not saying that CCL Carnival is going to net me that much money. However, I do like it at this level right now, and so I'm kind of just playing the field, which is a bit risky. So I am taking risks. So definitely keep that in mind. However, I don't believe I'm risking much. So, um, it's one of those things where, you got to pay to play sometimes to test that theory. I'm not going to say to test that theory out. There's ways of doing it without having to actually spend your money. But I did look at like the worst case scenario, which I feel like, all right, if she falls down to like $14, cut bait, you know what I'm saying? Um, Tomorrow is more of a gamble too, so I'm taking that into consideration. Uh, I will say that I will say that I went light on that one, just you know what I'm saying, just for that reason, and I didn't spend too much money, and I got a nice date outward as well. So that's where I kind of mitigated risk on that one. Why do I only like calls? I like calls because the market, when people buy, they buy low to sell high. In order for that process to happen, what has to happen? It has to go low and go up. So with that mentality, like the average you and me, we don't really short sell stock unless we're working with a lot of money. You know what I'm saying? And so I guess I'm programmed to really think that way. Maybe I'm full of shit. I don't know. But I will say this, I'm no dummy. I know that if I see a lot of volume on a big ass red candle, my first thought is not call unless the case supports that theory, such as I'm at a support level. And even then I'm going to wait for confirmation before I even take the play. So, But other than that, it's a psychological thing. There's no right or wrong. People make. I have a group of people that I hang with on Discord. Um, these are like the biggest bears you ever seen in your life. They they revel in the market bleeding. They love it. They hate when the market goes up. I don't understand how we coexist, but um, that's all trading styles, I guess. At the end of the day, if you want to take it as so, there ain't really no right or wrong way to do it. However, there's smarter ways to do it. So, for instance, if I want to be bearish, I can still get away with buying all. You know what I'm saying? I just have to buy bearish indexes or indexes that's following bear market. Does that make sense? So I could buy calls on SDQ all day. And the more I play it, the more I get familiar with how it moves anyway. So now puts, yeah, I could play puts on SQQ, but I don't think my brain is built up for that. I'm gonna just be honest with you. I don't have a real reason why I can't short SQQ, but there's other ways. And then for me, it's like if I'm gonna short an inverse of a bull market, I might as well just play the bull market. I might as well play QQQ, if that makes sense. So I'm gonna make more money on QQQ and probably SPY too, technically, because with SQQQ, you make money off of significant cent moves. Like it don't move up dollars like Tesla or SPY or QQQ. It goes up in proportion to the actual price. So if it's going up, if it's $18 and it go up 50 cents, that's half a dollar of $18. You know what I'm saying? That's a decent amount. It's not the biggest move ever. Now, if it goes up a whole dollar, you can bet your bottom dollar you made a lot of money on that move. So that's just ways of looking at my way of thinking, I guess, when I take plays, things like that. AMD, I cut bait. I got bored of that. It was moving too slow. I need my money moving. If it ain't moving, you fired. You got to get off the line. You standing around, you fired. That's how it is at my job at the factory. Your ass standing around, you gone. You're not making no money. You got to go. Move on. Go do something else. I got to replace you with somebody now. You know what I'm saying? But I got to keep that money flowing. That's how you need to be running your port. Um, I don't actually want to say that because slow money ain't bad money either. You know, it's good to have a balance, but at the same time, if you got a real life target of having a certain amount of money or retiring or whatever, then yeah, you working on a timetable. You can't really do the slow route. The young people can. I'm about to be 40 years old. You know what I'm saying? If I was to retire at 65, I only got 25 years to go. You know, that's if I'm even blessed to live that long. So like that's why I think the way I think. That's why I trade the way I trade. You know. So you gotta look at it as that.
Mhm.
And if I want to meet that goal of 25 years of being, debt free and not have to work, then I need to be learning as much as I can. That's why I'm like here every. I hope I've been here every day, and I hope I don't miss any meetings. And if I got things to share, I'll share them. If I got good videos, things like that. And I want to talk like, what's my opinion as far as the video? Was that was to you, right?
Who
You,
I
you
I think those is old, right?
Yeah, that's old then. Okay.
Because if you asking about in the video, we'll just
Yeah.
post the recording that was talked about already.
Yeah. Yeah. I figured
Yeah,
out.
Apple. And if another thing is y'all go on y'all 30 minutes and Spy, y'all could see it was in the selling channel. Oh, Spy was so easy to eat today. It was in the selling channel from the rip. And guess where the selling channel started on Friday? That's where the selling channel. Who's the host right now? Mario started this?
That would be me. Hold up.
Could
Want to
I
share your
get it real
screen?
quick? Yeah, just real quick. And then we could get into this if you want because um I think it's time for me to eat. I'm hungry. So We rejected at 447.15 too, and damn, that's what we put our resistance in. Yeah, it's crazy, right? So that's exactly what we put our resistance. So we rejected off of there, and then remember we have our trend line. I used the trend line. This is the trend line. I need 3 touches, and how I know this was a trend line because it was support and it was resistance, and it was strong too. Price always came back and touched it, so price is gonna come back and touch it. That's why our 20-day, remember, our setup. But or was that spot we had to set up for 445? Damn, I didn't even know the 20-day moving average was right. Oh no, this is the 30-minute time frame. All right, so boom, we rejected off of 447.15, and once we lost our trend line, um, that's when we started. Well, actually, when we lost 447.15, remember I told you our key level, it put us in a selling channel. So I don't just put my trend lines anywhere. I'm pretty good at it. It's just like connecting. It's like a game. You just connect and
Mhm.
you know that support. I mean, support was resistance before, and vice versa. What were you gonna say? Well,
No, I wasn't gonna say nothing, but I'm thinking in my head like, man, people should be having fun like drawing these lines. Like this is
yeah,
money.
I do.
Like drawing. Who knew that drawing can make money if you're not even an artist? Like,
Yo, and then I'll be fried. Like I'm fried right now. So I'm like, I'm over here like precise with. That's how my levels. I think that's the only reason my levels be on point, y'all. Cause I be fried, so I be focused. So we in a we in this we in a perfect selling channel when we lost for. We've been in the selling channel since September 11th. We've been in the selling channel.
at that Tesla
So
pop.
if you knew that, then you like, okay, well, 447.15 is my resistance, so we gonna wait for it to come back up. Because I know for a fact we either gonna reject hard or we gonna go up. We rejected hard again. So that's how you could have ate this. So now you just making sure everything stays in your selling channel. You draw your selling channel like how I just did, and you just need everything to stay in your selling channel. You don't need no resistance no more. You just need your next key area. I want to risk $1 to make $2, but in this swing right here, I want $6. So my resistance, so my support area, I'm looking for 441.15 or 439.90. And this would have been a crazy ass trade. We would have swung this. I know when to get out. My stops is on. I got worried about that, but I know when to add contracts because I'm looking at structure. We come down, we flush down. I know once we lose our 20-day moving average and then we come up, retest it, and reject off that, I know it's a wrap. Cause now we got our selling channel too. So boom, peep. We bounced off our top of our trend line and we bounced off our 20-day moving average. So I'm like, all right, add another contract because look, the structure right here too as well. Where we could bounce. I mean we reject structure right here and look, y'all getting free game. Look, we bounced off that right there, the structure. We bounced off the trend line in our selling channel. We bounced off the 20-day moving average. We added another contract. Now we down. We down. We just rolled this whole thing down. Plus we gapped down again. Now we under the AVWAP from last from yesterday, Monday. We under that. So we would have ate all that. And then once we fall out our selling channel, that's when the price really flushes. So we ate all that, and then boom, look where our candle is at. Oh, that was beautiful. That's a beautiful trade. And then it's the same thing now I'm looking for now. I'm looking for us to get under this AVWAP. So I'm looking for us to hit this trend line and reject. If we pass it, okay, fine. I'm looking for us to reject off of 445.30, our 20-day moving average. Put us back in this selling channel, come down, bounce off of AVWAP, bounce off of my top of my trend line, and then now I want us to break AVWAP. And then now I want us to retest AVWAP. You know, anything that breaks has to come back up. I want it to come back up before I go down with it. I don't want to jump in the car that's already going down the hill. I want you to come pick me up from on top of this hill and take me down the hill with you. Feel me? Then we ride up that trend line right there. I said we need to break the AVWAP. We need to come back up to the AVWAP for 42.60. I want to see us reject hard off of that and then fall back down to 441.15 area or a new structure right here, 440, 85 area will be why I would probably take the rest of my contracts off once we drop back down and leave a runner to smack this 439.90 again and go down further, because when stocks go up and then go down, it's going to go up higher or it's going to go up lower. It's not going to always hit the same spot. That's how you build structure. And so we are currently in the selling challenge. So just pay attention at your 30-minute time frame. Just do what I did. Just this is where it's at. Draw your it's so easy. All you gotta do is just draw your 447.15 area. Then look for the top right here. Look for 9/11. Look for September 11th area, and then find your trend line. Now draw your trend lines. Remember how this look. Screenshot it if you want, and then the top of it, and then now you have your trend line. And you don't even have to use trend lines, y'all. Y'all could do. I like to use this when I'm moving quick. I use extended, and I smack that. Boom. See that? Way easier.
Yeah, because I be having to extend it down, do this and shit, and I'm using TOS right now.
TOS.
Yeah, I guess I just need to get. I've been like this past weekend. I've been like on that like from sun up to sundown. Just playing with it, get familiar with it, and so when I draw my trend line, they'll be like, I guess, segments, I guess. Now I wish it was just a line. Like, give me a line. You know what I'm saying?
Yeah.
183 line, and I'll drop it where it needs to go, and I can be about my business. I don't want to like extend the line out, because then I might have to. Because I don't know, it's weird. And then when you try to get it where you want it to go, it gets retarded. Just give me a.
It's all about structure. Like right there, the structure we rejected off that today. So now we looking for we rejected off right there, up here. So now we looking for structure. Now we know the next structure is this area. This is where we want to reject, y'all. This area right here. We want to hit the most candles. We want to reject off of 443.30. Remember that? I've been calling that out. 443.30. And look, that's exactly what we did, y'all. Look how spot on that is. Structure, y'all. You see, this shit's not just bouncing off of nothing. Look how accurate that is. You can't get more accurate than that. That's just spot on to the cent.
Spot on, boss.
It's just structure, y'all. Just looking for the most candles, and you want it to sit right on it and let its tail hang. That's it. Trading is so easy. We just make it difficult. That's it. That's why it's hard. As long as you got your stops on, you know your risk management, how much you're willing to lose, how much you able to play with and be comfortable with losing. Always just don't always think you're gonna lose, but just have in mind that you will lose. Don't have in mind that this trade is gonna be 100% correct. If you don't have in mind that's gonna be 100% correct, chances are your stop loss will be to the T. You will focus way more on your stop loss than anything else, and that's the most important thing. And now I'm done talking, y'all.